Stay tuned for Butler on Business, coming up next on the Liberty Express.
Welcome back to Butler on Business. My name is Jason Riddle in the studio with Alan Butler. You may recognize our next guest as one of Fast Money 5 from the CNBC program Fast Money. He's also the author of the new book, Buy High, Sell Higher, Why Buy and Hold is Dead, and Other Investing Lessons from CNBC's The Liquidator, Joe Terranova.
Joe, welcome to the show, guy.
Good morning, Alan. Good morning, Jason. How are we doing?
We're doing fine. I'm a big fan of Joe Terranova's. Now, if I recall from watching you over the years on Fast Money, didn't you start off kind of in the energy pits?
Oh, I sure did. I started in the oil futures market back for the first Gulf War in 1990.
Well, it's an honor to have you on the show. You're a high-profile guy, and tell us about this book real quick.
Well, it's a call to action, Alan. It's a call to action that basically says, listen, the message, the marketing material of Wall Street is not what Main Street America should be paying attention to anymore. It's time to get active. It's time to roll up your sleeves. These are changing markets. These are volatile markets. You need to get organized. You need to have a team. You need to have an investment calendar. You need to be involved, and you need to treat it as what it is. It's a business. It's not a hobby.
Well, you have several things that are near and dear to my heart. Number one, buy high and sell higher, and buy and hold is dead. And I try to tell all the buy and hold guys it's over, but they have a hard time. They have a hard time embracing that concept.
Well, and the reason why is it's Warren Buffett. Let's be candid about it. They see Warren coming on television and saying, "Look, I basically hold on to these assets for as long as my lifetime," but the problem is that Main Street America can't do what Warren does. And what Warren does is great, and he does it real well. But you and I in Main Street America, we don't have the zeros at the end of our name or in the bank account that Warren does. And that doesn't allow you to hold on and endure the losses like he does.
Well, you mentioned buy and hold, but I say we're buying and holding. We just don't hold them very long.
No, when the market doesn't let you do that anymore. It's way too volatile. You've got high-frequency trading, electronic program trading going on, and it's driving this tape all over the place and frustrating investors, that's for sure.
Now, your book is divided into two parts. Number one, think like a professional, and number two, execute like a professional. So what is involved in thinking like a professional?
Well, first of all, you have to strategize. So beginning of Thanksgiving giving every year, I sit down with my team and I basically strategize and plan out where I think the tailwinds are going to be for the upcoming year and where I think the headwinds potentially are going to be. And it's the concept of trading second and planning first. That's how you think like a professional. Then how do you execute like a professional? You're strategic in your approach. You focus first on what your potential loss can be, which is not what Main Street does. Main Street basically says, well, how much can I make on a particular stock? It's how much can you lose? That's the ultimate question. And at the end of the day, what you should be doing is maximizing your winners, minimizing your losers.
So would it safe to say that you look at the macroeconomic picture, those headwinds and tailwinds, to kind of pick a bias?
Yeah, and we call that top-down investing, and that's exactly what we do. We look at the macro picture. We look and see what's going on with Fed policy. We look at fiscal policy on both sides of the Atlantic, which right now looks like the Student Council is making the decisions. We see how the demand is in the emerging economies. We look at particular commodities to see where the demand is, and we make our decisions from there.
Joe, the one thing that's most exasperating for me is that a lot of the stuff that we grew up as mantras for investing is out the window based on monetary policy.
I think it's all out the window, and this is a new environment that we're in right now.
Joe, given the current economic climate, given the current market volatility that's not going away anytime soon, a lot of investors are out there on the sidelines. They're paralyzed. What advice do you have for those folks?
Well, again, it's be more active. And, Jason, let me give you an example. So you've got many of folks that they'll come up to me in the street and say, hey, RIM looks like it could be a heck of a home run. The stock has deteriorated. I think this is the place you want to buy it. Well, to me, that's catching the falling knives. But I'll even turn the conversation back to those that are questioning me and say, have you gone on and listened, or have you read a transcript from an earnings conference call? And that's what all investors should be doing, being active. And the answer to that is no. Investors don't listen to an earnings conference call. They don't go on Yahoo Finance and read an earnings conference call transcript and see what the CFO says. But that's what you should be doing.
Joe, now, is a good proxy for oil the ETF oil?
USO? Absolutely not. Not unless the market is in, what we call backwardation, that being where the front contract is worth much more than the longer dated contracts. The best way to get your exposure, and Main Street should be doing this to oil, is plain and simple. Ask yourself the simple question, who has proven global reserves? Well, I know the Exxon Mobils of the world do, and they pay a great dividend, and it's one of the reasons why it's one of the better stocks. I know when you look at a company like Chevron, they've got it as well. Occidental, which is a land-based type of energy company, they have it also. And then I think you always look up north. There's a tremendous amount of oil up in the Alberta sands in Canada, and you've got names like Suncor up there, Cenovus, and CNQ. All those names give you great exposure, much better exposure than these oil ETFs.
And I assume if you don't like U.S. oil, then you're not a big fan of UNG.
Oh, boy. Ooh. No, heck no. No, that market's in severe contango, which is the opposite of backwardation. The longer-dated contracts are worth much more. So when you buy that, what has to happen is each month there's a roll, and during the course of the roll where you exchange your contracts in the February month for the contracts in the March month, you've got to pay to stay in the game, a transaction cost. I don't want folks invested in that. There's deficiency in terms of the returns.
Well, let's tell them a little bit about your book.
Sure.
First of all, where do they get it?
Well, they get it on Amazon.com. They get it at Barnes & Noble and basically anywhere where books are sold. There's some great case studies. There's some great stories over 20 years of experience. And I think what we do well in the book is outline a strategy and a call to action, as I said before. And it's time for folks to basically understand these volatile markets aren't going anywhere, and you've got to get the tools and weapons and place them at your disposal to execute and think like a professional like everyone else does, because the professionals, they're making money. And we want the folks on Main Street to make it as well.
All right, so my advice would be to go buy the book, Buy High, Sell Higher, Why Buy and Hold is Dead, and other investing lessons from CNBC's The Liquidator. And then, 1, learn how to think like a professional, and 2, learn how to execute like a professional. How do the professionals execute?
Well, the professionals basically execute by understanding, as I said before, the most important thing is how much can you lose. And if you think about it, bring it back to a simplistic Main Street example. If you and I were to go open a sneaker shop out on Main Street, the first question we should have, how much money are we going to lose on the investment? And unfortunately, Main Street America doesn't think that way. They're basically saying, swing for the fences and get that home run, not thinking how much they can lose. Professionals, they think first how much they can lose. They measure their risk.
You know, I have an analogy for that. I'm an entrepreneur at heart, and with today's environment, I tell my people, my aspiring entrepreneur buddies, it's more important to figure out how you're going to get out of that new venture than it is how you're going to get into it. Because if you look at people that bought shopping centers and things like that, they want nothing more than to get out of them. And if you don't have a good exit strategy, don't get in it to begin with. And I hear you saying that as far as investing right now.
Oh, it's the entry point is real easy. I mean, let's face it, anyone with $25,000 or so can go online, open up a brokerage account, and start hitting the buttons. But, you know, the real challenge becomes, once you're in it, just as you said, how do you get out, knowing when to sell?
Joe Terranova, Buy High, Sell Higher. We certainly appreciate your time and hope the book does well. This is a good one.
Joe, we'd love to have you on,
gentlemen.
And we'd love to have you on again, and I'll be watching you tonight.
Thanks for having me on, gentlemen.
Thank you, Joe.